In reaching its decision, the committee considered developments in the global economy and noted that global inflation had moderated, but the pace of the decline had slowed down. Headline inflation rates in the major economies have continued to ease, but the pace of the decline has slowed down. The core inflation rate has remained sticky in the advanced economies, mainly driven by services and wage price inflation. Global inflation is expected to decline from 6.7% in 2023 to 5.9% in 2024, reflecting the impact of tight monetary policies and cooling labor markets in the US. However, the pace of decline in inflation, global inflation, has slowed down, reflecting persistence of higher than average inflation in services prices and nominal wage growth attributed to wage negotiations in some countries earlier in the year. With regard to oil prices, the international oil prices have moderated. However, an escalation in geopolitical tensions in the Middle East could result in higher oil prices in the second half of 2024. The OPEC Plus member countries met on August 1st, 2024, and reiterated the group's intention to start unwinding the 2.2 million barrels per day voluntary production cuts from October 2024. With regard to food inflation, inflation has continued to decline with improved supply of key food items, particularly of sugar and cereals. As you can see there, the overall global food inflation is projected at -3.1, and that reflects the decline in inflation on sugar prices as well as the cereals prices, mainly because of improved supply in Argentina and Brazil for maize, but also the improved supply of sugar in India as well as Thailand. And the reduction in sugar prices and cereal prices offset the increase in edible oil prices, resulting in a negative 3.1 overall global food inflation. In regard to the global economic outlook, global growth continues to recover, supported by strong growth in the United States and improved growth prospects in some large emerging markets, particularly India as well as China. World economic growth is projected at 3.2% this year. This is according to the July 2024 WEO projections of the IMF, and it should increase by 0.1 to 3.3% in 2025. There's strong performance by the United States, whose growth increases from 2.5 in 2023 to 2.6 in 2024, and already we've seen a fairly strong performance in the United States in the second quarter, with growth having accelerated to 2.8 from roughly 1.4% in the first quarter of this year. Similarly, the United Kingdom and also the Euro area, we should expect some improvement in growth. In the United Kingdom, we should see an increase in growth from 0.1 to 0.7 for this year, and a further acceleration to 1.5 in 2025. For the Eurozone area, the growth was only 0.5% in 2023 and reflected the contraction in growth in Germany of -0.2, but that is expected to be reversed this year and to have a positive growth of 0.2, resulting in the Euro area growth at 0.7% this year, and then a further acceleration to 1.5 next year. In the case of emerging market and developing economies, China's growth has been revised upwards in the July WEO projections, Initially, it was 4.6 for 2024, and this has been adjusted upward by 0.4 to 5%. And similarly, the growth in 2025 has been adjusted upward by 0.4 from 4.1 to 4.5. India's growth continues to be very robust, having recorded a growth of 8.2 last year. This year is expected to grow by 7% and a further 6.5% next year. In the case of Sub-Saharan Africa, the growth for 2024 has been revised downwards by 0.1, and that also reflects the revised growth in Nigeria by 0.2%, so that now Nigeria is growing by 3.1 rather than the previous 3.3%. By way of comparison, Kenya's growth in last year was 5.6, and that was higher than obviously the global growth. It was higher than the advanced economies, and was also higher than the average for the emerging market and developing economies, which recorded a growth of 4.4%. And for Sub-Saharan Africa, the average growth was 3.4 compared to 5.6 in the case of Kenya. And going forward, the same pertains in 2024 as well as in 2025, where the average growth for Kenya is higher than the other regional averages. In the case of the global financial markets, the markets have remained stable, and this has been reflected in the improved performance in the equity markets. And to a certain extent, this improvement in the equity markets reflects improved global economic conditions, and also the easing of eased financial market access for the emerging and developing economies should result from this stable global financial markets, particularly as the advanced economies start to lower their interest rates. And we hope that that will reduce the cost of funding, and that emerging economies and developing economies can access international capital markets at reduced interest rates. So the key takeaways on the global developments are the following: that global growth remains steady in 2024, supported by strong growth in the US, but also improved growth prospects in China as well as India.